a lot of times. And so this picture, for me, it's like, okay, which road do I take and what direction do I go? And hopefully today's, at least you'll take away 1 or 2 tips from today's talk. And please, please jump in if you have something to add or if you want to ask a question. So the number 1 item on the list is to know the deadlines. And let's talk a little bit about tax deadlines. The one that I didn't mention is 12/31/2019. So by the last day of 2019, you should have deposited whatever income you're going to claim for the year, put that in the bank, or write in clear checks that you want to claim as expenses for 2019. So that's sort of your drop dead date for your P&L, but you might be able to contribute to an IRA up till April the 15th. So you should talk with other advisors in your circle of influence. So a financial advisor in terms of investments, retirement planning. You should talk with a tax attorney or a tax accountant for individual or corporate tax planning. What I help people do is connect with different resources that and expertise that I don't have. So as Dean would probably testify, I do know how to make coffee. I know how to talk across the table to people and help them feel comfortable talking about their numbers. I'm not great in a lot of things that I would hopefully connect with each of you as your expertise comes into play. So the number 1, the first deadline for most of us as business owners is January 31st, when we have to create and mail or deliver those W-2s and 1099s to our employees or our subcontractors. So if you pay a subcontractor over $600 over the course of the year, then you owe them a 1099 by January 31st of 2020. March 15th is the tax deadline for S-Corps and partnerships. And then April 15th is what is best known for an individual tax return deadline unless you extend for another 6 months. So April 15th this year is on a Wednesday, just so you know. And I do have some giveaways, so maybe we'll start out with a small giveaway. Who knows how many days to Christmas? Yes.
Siri, how many days?
Oh. Okay, so there are 70 days, 70 days to Christmas, which is not too far off.
What'd she say?
70 days.
I didn't ask.
70 days. Oh. Yeah.
I was joking.
Yeah. So we'll try again here in a minute.
Yeah, we didn't do too well with that one.
Yeah.
What if my friend Siri knows the answer? Can I still get the prize?
So October 15th, of course, was yesterday. So that was your extension deadline. If you file an extension for 2018 taxes, hopefully you have filed your tax return. I've told this story briefly before, but I have one client who last filed their taxes in 2005. So we have 13 years of tax returns to file for him. He has gotten a good start on that. At least he's talking with me and we're gathering information and I'm putting a spreadsheet together and trying to help him get through 1 year at a time so he can be up to snuff, in good order by the end of this year. Then he'll be in good shape for 2019 filing.
You can avoid jail.
Question, sometimes on the radio, you hear these people say, hey, I have a tax debt of $120,000 and I settled it for $4,000 or something. And the concept, if they can't save you anything, there's no charge. What's your opinion on those advertisements that we see on the radio and on TV to reduce your tax debt, even if you hadn't filed your returns?
Well, so I think a good resource for that, I've seen Debbie Highlander with Highlander CPA firm. I've seen her negotiate on behalf of clients to reduce that tax liability. So if you've got somebody, a tax person, talking with a tax person at the IRS, that's your best bet in terms of reduction. Sometimes they will waive those fees or even take a one-time payment. So most of the time, they, meaning the IRS, will give you time to pay. Or even even write it off. So I have seen, through my banking years, I had one client who owed $1.2 million in back payroll taxes.
Wow.
And so that kind of got him in trouble with the bank because the IRS can come in and put a lien on all the money he has in the bank, and that primes the bank being able to recoup their loan. So he still can't understand why the bank, he never missed a bank loan payment, but he had this huge tax liability that was hanging out there. And it was 7-8 years going back and forth with the IRS from the time that I worked with him. So I saw some things that the IRS was doing that I didn't believe they would do in terms of giving him more time. The restructured payments, like typically they'll set up an ongoing payment plan for the back taxes, but you have to keep your current taxes current. And then when you mess up in that regard, then you got to go back and renegotiate your deal. But I would say working with somebody you know, love, and trust, particularly your tax accountant, a CPA who can get a power of attorney from you to negotiate on your behalf.
Along the lines of Troy's question, I keep hearing these ads for Optimum tax relief. What do you think of them?
I don't have any firsthand experience with that. Me personally, I would like to know who I'm dealing with and know that they're gonna best represent my interests. So I'd really check them out. I have a story to tell about a personal credit situation too. Did you have a
I was
question?
just thinking along this, they're talking about people that got in trouble with the IRS, started the business, and then I'm thinking, I'm stuck getting real estate and all that. I'm in the beginning. How can I vet all that? What software, is there any software out there you recommend to help me to track all this and get me ready for the January 31st, all the different deadlines?
So I can give you a checklist for a startup. This addresses more folks who are already in business.
Okay.
But I'll be glad to help you with that. Last night, I met with the co-starters class at Epicenter, so I helped facilitate a group of about 10 startup companies, and we kind of went through the checklist of what to do and to get set up in order to stay out of trouble with the IRS, the state, and also the local agencies, the city of Memphis and Shelby County. So you've got licensing as well as taxes. So on point number 2, one of the first steps, like my guy who needs to file 13 years of tax returns, we looked at the last return that he filed. And so at least I have a copy of that. I know where he was in 2005. I can look at his numbers that he's provided for 2006, about 7, 8, and 9, which is what I'm kind of working on a 5-year series in his case to look at trends. So you should do the same thing in terms of a business owner. Look at the trends in your business. What did you report last year? What's going to be different this year? If you had a big real estate purchase or equipment purchase or a sale, then that might be an additional tax form to pull out and be prepared to complete for 2019.
So you work directly with the IRS yourself?
I personally have not. I am
Okay.
familiar with the power of
Set it up.
attorney. Yeah. So I would recommend that, like an enrolled agent, somebody like Wes Parker,
Yeah.
if you gave him power of attorney, I would trust somebody like Wes to represent me with the IRS. He would call them up and say, hey, this is the situation,
good.
try to buy me time or the best deal possible if I got behind on something or got in trouble. So an enrolled agent is not a CPA, but they are certified. They have some higher designation than just me being an outside consultant. An enrolled agent has more expertise in tax.
And that
And I
was
do-
Wes who?
Wes Parker,
He's
and he is,
Okay.
he's gonna be less expensive than, say, a CPA. So you're gonna pay him less for his time. So is anybody in here, I'm assuming, well, maybe I shouldn't assume. Are you W-2 employees? Some of us are W-2 employees. Some of us are independent contractors. Some of us have a business on the side. The single member LLC, so one owner, let's say you own 100% of an LLC, you would complete a Schedule C, which shows your business income, business expenses, net loss or net profit, all your depreciation associated with the business. That whole schedule is your business. If you are a solopreneur, a sole proprietor, a single member LLC. If you have a partner, even if it's a spouse, you file a partnership return, and the partnership return splits the K-1s according, like if it's a 50-50 partnership, husband and wife, the husband and the wife would get a K-1 from the business. So the 1065 partnership return is your business return.
Okay.
For a regular C, so I have one client with a regular C corporation and about 15 stockholders. That's a different situation. Do we have anybody in here with a regular C corp? Service Master by Cornerstone.
I'm a K1.
Are they a regular C corp?
I think so.
Okay, okay. But you're an employee,
Well, I
or you're an
still-
owner?
No, I'm an employee.
So Nita, like, do you have to have LLC for the startup? Like, if you're the solopreneur, you don't need to have an LLC, right?
You don't have to have an LLC. In fact, I recommend if you're just starting to go ahead and set yourself up as a sole proprietor. The more stuff you own, the more assets you have to protect, the more important it is for you to organize as an LLC or a C Corp or an S Corp. If you rent an apartment, don't have a car, don't have any money in the bank, it doesn't make a lot of sense to spend money organizing yourself to protect assets that you don't have, if that makes sense. So an LLC to file with the Secretary of State is $300 a year and some change. And then if you make changes to that LLC, sometimes they have like a change order fee. So it's roughly $300. And when you organize as an LLC, you do get on the radar of the state. So they'll be looking for tax returns to be filed and taxes to be paid, the franchise and excess tax, property tax, the personal property tax. So you kind of get on their radar once you organize as an LLC.
We are an LLC.
You're an LLC, okay. So on point number 3, this gets to knowing your number. So a number of my clients come to me. I have one lady who we initially met 3 years ago. I looked at her numbers. I said, there's some things that don't look right to me. Let's get a bookkeeper in here to fix what doesn't look right. I can tell you this isn't correct, this isn't correct. And she was assuming at that point that when you sync your bank account and your credit card account information into something like QuickBooks or software that captures your bookkeeping, that everything's okay. Well, that's not true. You're always reconciling your bookkeeping software with your core documents being your bank statements, your credit card statements. So 90% of the folks that I work with have overlooked that, and therefore their QuickBooks or their bookkeeping software is screwed up, their entries are screwed up. So when you run financial statements on screwed up information, then the statements are not as meaningful. So that's a clean. So 3 years ago we first talked about this. Last month we met with a lady who's going to help us clean up 3 years of books for her to get her financial statements in order, because she has grown to the point where she needs those financial statements to hand over to a bank or an investor, and they need to be right. And up to this point, it's just been her looking at them. Oh, that's not right. Well, I'm going on. I'm make that next sale. And so a lot of businesses put that off, and it just becomes more expensive. Kind of like my guy with the 13 years of tax return. So looking at your numbers. And that would be, if you use QuickBooks, running your balance sheet report, your profit and loss, your cash flow statement, to see where you are as of today or as of the end of September. and then gauge what changes are going to occur between now and the end of the year. That'll give you a good estimate of where you'll land the end of the year. The next point is look at your accounts receivable. So accounts receivable would be, I invoice Trevor for consulting fees of $500. It goes on my book as an accounts receivable until he pays that. If I invoiced him 2 years ago and that receivable is still on my books, it's probably not likely to be paid unless there's a special circumstance. So that becomes a charge-off, which is bad debt expense, which increases your expenses, which lowers your income. And so this is kind of a jigsaw puzzle to try to manage your bottom line and anticipate your tax liability.
One thing I learned that I didn't know when entering, I learned a lot in entering the business is we started putting a little bit of money aside for bad debt into an account because, you go into your business wholeheartedly and honest and you think everyone's going to fulfill their obligations, but that does not happen.
Right.
And
That's a good idea.
it really suck the wind out of your sail if you haven't put money aside a little bit at a time for those people who don't keep their obligations to pay you for what you did. And so you're billing and you might have all this money out there waiting to come in and some people conveniently, I hate to say that, but they conveniently forget their commitments. And so then you're stuck not meeting your other obligations.
Right.
Because of it. So we've learned to do that. And then we've adjusted our guidelines for how we receive payment to minimize that risk. So that money then began to shrink.
What do you do with the money you set aside? I'm not clear.
Well, what happens is, now we've changed our requirements for people paying us, so we limit our risk more. In other words, we require people to do an ACH from their account each week, rather than billing them and expecting payment. So that reduced it a lot. But prior to that, we were billing people and asking them to pay weekly because we pay our caregivers right away. And some people hold off. Some people find a way not to pay you for whatever reason, even though you perform the services. So by having that money set aside, if it comes to that point where it's going to cost you more money and aggravation to go after the person to get the money, and in my case, they're usually infirmed, and like, who are you going to sue? What?
Right.
The
So
person who's in the
want-
hospital? It's not going to happen.
If they want to agree to a weekly ACH, you don't want them for a client anyway.
Pretty much, yeah, that's it.
So setting up a savings account for that might be, where it's in a separate account.
We have a
that might
quick in
be
account
a
that we
way.
just put a certain percentage or based on volume.
Nita, what I do is I have a workbook thing that it's an Excel spreadsheet. We determine for the client what needs to go there so future free. I put D&I in there, clothes,
Okay.
car maintenance, that kind of stuff. And I have a workbook and it keeps up with all of it. If you subtract money, you don't have to do any subtracting, and that workbook equals your checkbook balance.
Right.
So once the checkbook and the workbook equal, you can go at any time without having to go to the bank and figure out what's what. You can look right on there and say, hey, I got so much in clothes, I got so much. You can do this for a business account or you can do it for a personal account.
That's a
So
great
that's
tool.
that's a hands-on thing. And every month I put like $300 every month for future needs, so that I'll have it when I need, and that's for my business.
Well, I think
So if I have
knowing
somebody who's
more-
owing me $300 and I have $600 in that account and I'm gonna write it off
Well,
on the
well,
balance
part of-
sheet.
So part
I
of
wouldn't work it that
the
way.
management of the business could be working out those receivables. If somebody owes me $1,000 and they can't write a check for 1,000, but they can write a check for 100, and we put them on a payment plan. That's one way to collect that AR over time, and having that discussion with whoever owes you money. Same thing on, like on point 4, again, on accounts payable. A lot of little companies are financed by free trade debt, so their suppliers give them access to supplies and materials, and those vendors don't get paid for 30 days, and they don't charge interest either. the trick there would be keeping that relationship in a positive way with the supplier so that you balance paying the most costly debt as, frequently as possible, but keeping your trade suppliers, particularly if you get in a cash crunch, am I gonna pay this person, this vendor or this vendor? So it's a balancing act, it's knowing your business, knowing who you're mostly dependent on to get supplies. You wanna keep that supply chain in place, but take care of your business. So educate yourself. So we talked a little bit about 1099s. Educate yourself about deduction opportunities. So I was working with a lady who just bought a car, and she uses that, the use of that car is like 70% business use. So there are some tax rules if you are ready to buy a new car or a vehicle that's used primarily in the business or more than 50% in the business, then talk with your tax person, your CPA about that purchase. And if you have had the opportunity of making more money this year and you're looking at reducing your tax liability this year, you might think about doing that in the next couple of months. Because there's some depreciation that you might be able to take one time for 2019 and not write a check for it. So that would reduce those tax dollars without, without writing a check on the other side. Does that make sense? No, I'll see the look on your face. So another.
Say that one more time, I'm sorry.
Well, so different people are comfortable with different levels of debt, but let's say you're comfortable with buying a vehicle and you buy it with loaned money. So you have a car loan and then you start making those payments, but the deduction on the tax side is more than those payments. So that would be to your cash advantage. It would reduce your tax liability, so you're not paying Uncle Sam and you got a new car.
So late in the year, you can still take depreciation for the whole year,
Yeah.
2019 is what
Yeah.
you're saying.
Yeah, and there's some, and so look at the tax rules. So I was reading where a vehicle between 6,000 and 14,000 pounds, you get a higher deduction. So that's a better impact, a more favorable impact for you. It increases your expenses, which reduces your profit, which reduces your tax liability. So, similar situation with real estate. So, you want to tell me when we're running out of time?
Yeah, you've got about 3 minutes.
Okay.
Wow.
All right. So you have the rest of the tips. I was going to tell this story. I'm going to skip to number 9. So my son-in-law and I are sitting at the table this week. And he says, "Did you hear what happened? My identity got stolen." I said, "What do you mean?" What happened was his information was impacted by the breach at Equifax. This happened in September of 2017. Somebody used his personal information to open a credit card in December of 2018. They opened and had access to a credit card up to $6,000, no interest, no payments for 6 months. So the bank didn't get paid, but they weren't expected, so it wasn't really past due. Then they started getting past due. So September of 2019, Greg finds out that his identity has been hacked with a phone call from a business credit card processor who was trying to get him to confirm to open a credit card processing account on a fraudulent business account. So they had stolen his personal identity. They had gotten an EIN from the IRS. They had set up a fake company with the Secretary of State of Tennessee. They had used his personal information to, for $6,000 on a credit card that was bogus. A good address in Arizona, but it was like a P.O. box. A bad address here in Memphis, but similar to his address.
Well, they knew what they were doing.
So the business has a website. The fraudulent business has a website, and it's registered on 3, like Yelp and Visipedia, and 3 online directories. So this point number 9 is, go to equifaxbreachsettlement.com, put in your name, put in your last 6 digits of your social, see if you were impacted by that breach. If it says yes, you were, then you need to go ahead and get a credit report if you haven't looked at it recently, and make sure there's no fraudulent activity on your personal credit report.
I did that, by the way. I'm waiting for money. You can get
Okay.
6 months worth of free, keeping people from getting to your stuff, whatever that is, whatever.
Protection.
I think you-
Yeah, like the
And 6 months, or you can get some money. Well, I've already got I got the LifeLock thing.
Yeah.
I'm telling you, LifeLock, I really like it. They
So
take-
LifeLock is a good protection, and but that was really an eye-opener for him and for me, because for people to go to that extent, to register a bogus company and complete the information with the IRS. So
Right.
we had to get on the phone with the IRS to confirm the EIN that was bogus. So, am I out of town?
You're out of town, you're not out of town.
Okay, so one more, so point 13, I'd like for you to write in, and it ties right into Dr. James, is stay healthy and stay stress-free during this whole process. So point number 13 is your personal health drives your business. Everything you do personally is driven by your personal health, so take care of it. Sleep, assess how much you're sleeping or not sleeping, what you're eating, your anxiety level, and make some changes to manage that so you can get through some, high activity months, the end of the year, and be able to continue doing what you love to do.
Wow.
Thank
Well
you.
done, very good.
So I have 3 gift cards. I'd like to come back.
All right, come on back. Okay, let's see, guess my date of birth, March. All right, folks, let's give her another round of applause. This is very important. I wish we had more time. Talk about a knowledgeable lady. Whew, Nita, that's very impressive. Thank you very much. Joe's got a couple announcements, don't you, dear?
I do.
All right.
For those of you who came in late, just want to remind you that we want you to get your business in gear with the power gear. So if you haven't already, write your name and your business and your contact information in the middle of the wheel on your little card. And then write out here some of the industries that you would like to be introduced to. One of mine is newlyweds, and the other one is somebody you know that's interested in buying a house. I would love for you to stay a little after talk shop and let's set up a one-on-one. Tell me who you want to be introduced to, and let me try to set up a one-on-one for you from people that I know. So write out that, and before you leave, I just encourage you strongly not to walk out those doors until you have set up a really good one-on-one with someone. And if you're interested in advertising with and being a sponsor of Talk Shop, Robert Oates and Mark Loden, speak with me after Talk Shop.
All right. You got 3 gift cards. Is that right? How would you like to do it? You want to
That's
draw
right.
some?
I would like to give one to Dean.